Good evening again from Silicon Valley. Today, we're going to talk about startup investments in Korea, and we have the pleasure of having with us Eric Yoo from KB Investment. Hey, Eric.
Hi, nice to meet you. This is Eric. I come from KB Investment in Korea, and then I'm the team leader of Global Investment team. And I'm in charge of the VC and some of growth capital in Asia market.
Excellent. So thanks for being part of our conversation. As you probably know, we've been studying the Korean market for quite some time. Some of the data that we want to share today is about the growth of the VC market in specific in Korea, and we have a pleasure of sharing some insights with you. You've been operating in this market for a number of years, and you have lived hands-on the growth and the scale, the current scale that the Korean market is now facing. So we're going to share some of this data, but maybe Eric, help us identify some information about the fund that you manage and a little bit of background of KB Investment. And KB as a group that we know is a larger group where KB Investment is just one piece. So give us a little bit of a flavor of your entity.
Oh yeah, so KB Investment is one of the top tier VC and private equity house in Korea. And then the KB Holdings is one of the largest financial institution in Korea and Asia. And then KB Investment is a VC&P house under the KB Holdings. And so our AUM of the VC is reaching to the 1.3 to 4 billion at this moment. And so we classify the kind of top tier size of the fund managers in Korea, and then also covering the Korean market, not only Korean market and both, but we invest into Asian market and other overseas market together. Also, KB Investment is a very famous because we're running the VC fund more than 30 years. It's the longest history we have. So since before the year 2000, we have many experience about many coverage of the industry, many coverage of the streets. So the incorporation altogether, now we are looking at the more global capacity house in Korea.
Excellent. And then with this history of 30 years, there is a lot that you guys have seen develop over the years. Maybe we have, I think, a slide on the last few years of development. You have a number of funds that you manage in parallel, obviously on different focus. So it's pretty small, but you can see on the screen. Maybe you can give us a little bit of a flavor, in particular the ones that you are the managing director on, that is Centauri Fund.
Yeah. So actually, I'm the manager of Global Platform Fund, and then within the Global Platform Fund, we set up the more affiliate Southeast Asian dedicated fund too, and then that is the Centauri Fund. Because the reason why we launching the Centauri Fund from the Global Platform Fund, we believe that if we're looking at the Southeast Asian market, we need to design for more localized fund. So we made some alliance with Telkom Indonesia. Telkom Indonesia and KB Investment set up the joint venture fund in Singapore, and that is a Centauri Fund. And I'm the first managing partner of the Centauri Fund. But at the same time, the total fund manager of Global Platform Fund will launching in year 2019.
Excellent. Can you give us a sense of the check that you guys write on average, or the beginning investments, just to understand the size? Because my understanding, you go from early stage to growth, so with a wide range.
Okay. I can say the two types of story. First one is Global Platform Fund. So actually, Global Platform Fund is designed for earlier to more formal growth stage of the startup in Asian market. And the total size around the 250 million US dollars VC fund. and more than half, so 100 to 120 millions designed for overseas market, and another 100 million and 120 millions looking at the Korean market. So we combination together as a strategy. For the international market, we mainly focus on India and Southeast Asia. And we deployed more than 60 to 70 millions in India so far, and we're holding the 7 to 8 portfolio under the fund. Another part is Southeast Asia, and I already told you we set up the fund of fund. That is a centrality fund for the Singapore. That's dedicated for the Southeast Asia, and also we choose a co-GP structure as a strategy. And Korean part, another half of the fund need to deploy into Korean market, and typically we're targeting about the growth stage. Growth stage means more than Series B. Start from the Series B or C, and then we're targeting about at least, let's say, 6 to 7 million to 15 million or 12 million to taking the lead position from the growth stage of the startups. And domain-wise, frankly, we open to every domain, from the new manufacturing, internet software, digital contents, to bioscience either. So in those fields, we look at the growth stage is a main part of the Korean investment that is.
Got it. Perfect. I don't know if you can share maybe some of the areas of where the major LPs come from, just to maybe without the names, but maybe, if these are national or international, government or private institutions.
Okay. Cannot disclose the more specific names, but of course our holdings join as a LP. Korean finance institution. And also another Korean sovereign fund participated as a LP, and also foreign state-owned company and foreign minister of finance, which means the foreign sovereign fund, and non-minor stake, but partially also the private sectors coming into as a LP. Good.
And definitely, I think there is a growing interest as an asset class of the VC investments. And I think this is corroborating some of the thesis and the data and reports that we just published in our report that we just shared and launched at Next Rise. And the thesis is the following. In our report, we are focusing on what we call the scale-ups. That is specifically the definition of startups are a little bit more mature, the ones that have raised at least $1 million. And we've reported now a growth of around 900 of those size startups that we call scale-ups in Korea, that in total have raised around $30 billion in equity funding. And so those includes both funding from you guys, from VCs, and also from public markets, so IPO. So everything in aggregate. But I think the most interesting piece, I don't know if we can see here, and there's a chart that is a little small here, but one of the area that we are analyzing here is the comparative analysis of how different similar countries, maybe in size and GDP, are evolving in the world of VC funding. And basically here, this chart says two things. So on the x-axis, we have what we call the scale-up investing ratio. And this is the amount of funding that goes into startups based on the GDP of the country, right? So the portion of the GDP that is dedicated to startup funding. And on the y-axis, we have this, what we call the scale-up density ratio. That is the number of scale-ups, so startups that raise at least $1 million per 100,000 people in that specific country, right? So that's the kind of two measures of one side, how important is the VC and the support of startups for an economy of the country, and what is the ability to create, so the density of those startups. And it's interesting to see here, we just put the 0 of the axis on Korea of last year when we launched the first report, and showing what is the current positioning of Korea just in 1 year, right? So moving up and to the right, and then up to the right, you see the very far and the startup nation by excellence, that is Israel, right? Very high scale-up investment ratio because the economy of innovation, and even higher scale-up density ratio. But then you definitely see some other outliers there, in particular the northern countries and US. And Korea is definitely accelerating to go in that region, in that quadrant. So I think it's particularly exciting to see not just the picture of today, but also the velocity at which is moving in the right direction, and is according to these two measures, is definitely better placed than the average of Europe, way better placed of countries like Germany, for example, that it just surpassed also in the number of scale-ups, and definitely in a good position. So I think I think enough of data, but we wanted to show something that is, I think, based on the latest research. Maybe you can give a little bit of your insight. You've been doing this job for quite some time, and so even if it's not based on number, have you seen the VC market progressing in Korea?
Okay, there are many reasons for that chart comes on, but okay, let's focus on the VC first. So since the year 2013, I'm starting to invest into VC in Korea, and gut feeling tell me that at the time, not gut feeling, but maybe you can check about more specific numbers. So at the time, the new deployment into the VC field, VC market, maybe around the 1 billion market. But now turns to be at least 7 to 7 times bigger than that size, which means kind of around the 6 to 7 billions capital injection into new VC market. So kind of new coming startups and growth stage of startups get the more than 5 to 6 billion US dollars from the VC fund, not only VC but any growth capital together. It's just that this number is get lead from the IPO market. So I'm only looking at the VC field, let's say. So the biggest reason why here, from my perspective at macro level, in case of the Korea, within the Asia, I think that Korea is the most fast country where the country trying to shifting the economic structure. So Korean economy are very famous as a kind of conglomerate-driven country. Still, I think that the kind of majority percent of the economics and kind of value added comes from the conglomerate, let's say giant company.
Yeah.
And giant company also holding the first or second vendors. So they their formula in country's economy is creating the trickle down effect. This is working as a kind of before the digital era, but after the digitization and after the kind of beyond the classic manufacturing economy, because we cannot compete it with the China or another developed country directly in terms of a manufacturer in region. So we need to do something more than that, or we need to something create a more better value than kind of the manufacturing driven industry. So in that sense, so many people still tell me, so Korea is very famous as a semiconductor and very famous as a kind of automotive. Of course, we have and the manufacturing factory in here. But so truth is, we are very famous as a kind of Naver, Kakao, Ua Brothers. These kind of super app oriented platforms changed our daily life very gradually. Not that within the 1 year everything changed, But during the 5 to 6 to 7 years, many people's behavior is changed by digitization, which means our supply chain or way of creating the output is slightly different and changing, accompanied with the kind of digitization and some of new platform economy comes to the market. So this part is the first component to reading the innovation. So this consumer and supply chain parts changed by a digital means. A lot of another how can I say, another industry or another value add industry also can be created. So after the kind of year 2018 or 19, these phenomena driven by the big corporation together. So which means it's very easy to say that the typical conglomerate, okay, I don't want to say the conglomerate, let's say a giant company, because they have some inertia, right? So it's very hard to change it. But now they realize that if they can follow some kind of digitization or new type of economy, then they can survive. Jargon says that still, even 10 years ago, many giant company guys tell me or tell us, oh, we need to survive with some digital innovation. But that is kind of casual slogan. But now it turns to be their strategy. So,
and is this strategy bringing also good financial returns? Is there, the word and the feeling around, and maybe some statistics, maybe without going into details, but is the general feeling that the VC as an investment asset class is returning interesting results compared to other asset classes? Is that something that you see more of an expectation?
It's a very difficult question, but okay, let's say also divide it to two parts. Financial returns, we need to a little bit waiting and see to monitor, because still our VC market turns to be a kind of, let's say, more better VC market is only historically we have these recent 10 years. So it's not enough to longer time that I see the crucial financial performance as a investor.
Mm-hmm.
So, but obviously one thing changed. Our IPO market or merger and acquisition size is getting bigger and bigger.
Yeah, that was my following question is the VC market will boom when there is more market liquidity, right? The market liquidity comes with more M&As that are competitive. So where the price to pay is typically higher because it's the bigger companies are fighting to get the best solutions, and then obviously with a very fluid IPO markets. And we have seen lately, and that's again in our report, some very interesting growth in IPO market, national IPO market, so with the national stock exchange, but also some examples of companies or Korean companies that have gone public into, for example, the New York Stock Exchange, that makes the market even, I think, more fluid and more international by nature.
Oh yeah, that's kind of very significant event for us here. Going to the New York Stock Exchange is quite, we have a couple of cases, but sooner or later, let's say within the 5 to 6 years, those companies de-listing again because of the cost and the market situation. But Coupang is not the case. It's not a similar case with them, because in case of the Coupang's case, the evaluated by the international institutional financial institution to listing, and also the cap table. So global investors already up there, and the Coupang's business itself as classified as a very innovative business model. Even the Korean market recognized as a kind of mid-sized market, but this business model working very well as an innovation, and they can also duplicate this business model into another region like Japan or etc. This kind of way of thinking is very hard to pop up this idea maybe, let's say, 10 years ago.
Yeah.
But now, thank you for this kind of accumulated event. The giant company also can think and compare to the startup ecosystem for their survive. And then, like I say, still current time is investing time, I think. Let's say investing time, growth time, exit time. So entire Korean VC market, still we are somewhere around between investing time and growth time, not harvesting time. But partially we can say that some signal from the IPO market or size of the merger and acquisition and case of the M&A. So let's say vintage 10 years ago, we have started many investment, and those vintage now turns to be not exit or harvesting time, but somewhere around in growth stage. But they signal us to shows the liquidation can be more bigger and bigger. And Coupang is a kind of extreme case. And then I want to say,
No, please go ahead.
Yeah. So in this frame, the more important thing is the typical giant companies start to participate into the investment league through the CVC, open innovation. 10 years ago, 5 years ago, let's say, I'm bringing some of my portfolio to bring into the giant company. Oh, why don't you acquisition this company as an inorganic growth? Because this e-commerce is quite innovative, and so your retail system can be changed very quickly, blah, blah, blah. So typical answer is too small, or why don't we do by ourselves?
Yeah,
general answer. Maybe,
That's a general trend that we've seen around the world, right? Is now the pressure. That's why all the new units of a CVCs or open innovation, that they need to find different rules inside also to deal with startups, because even the historical M&A that large corporates are used to are for very different sizes. And so the timing, the modality, the numbers do not apply when you're dealing with a company of 20 people, for example. And maybe, do you have some relevant success stories that you want to share with us? Maybe that you have lived through your long experience as an investor?
Let's say, here I can say, successful story. So I want to telling is how I can contribute to the ecosystem, but I'm the only small VC investor. So let's say luckily I have the couple of successful portfolio under my track record. So Kakao, and the Ua brothers, and the Rock and Roll is the first GPS platform in Korea, and very first generation of new platforms I had a chance to invest in. But that's a very great luck. It's because at the time it's a kind of shifting time from typical economy to digital economy. So luckily I can meet the many great founders at the time. But the truth is now by ourselves also need to change our strategy. So that is great luck. But now it's a competition time. A lot of competition here. Like I say, even giant companies start to participate in here as a competitors. So we need a more different strategy to make a more successful of my track record. So my choice was going into the different geography is a first choice direction. And second one is I want to test about different ethics of the investment, such as not the minority intake, but want to take a majority and kind of trying to shifting the business position from A to B. Let's say one startups, I taking some majority, and then I'm finding out the more different opportunity, get together, and then I'm trying to shifting the company's position, and then So which means everybody do the same investment, let's say, making the portfolio, taking the 5 to 15% of the stake and 10 to 20 portfolio under their basket. So same competition then cannot create some differentiation. So much I want to take some more majority and not to control the company, but providing the more service as a capital side and make these startups growing more quickly, then maybe we can reach into the more fastest. We can get to some faster track to bring them to the more faster growth stage.
Got it. So using some of the tools that typically more mature private equity would use, right, to leverage the assets and the portfolio that you might have. Let's talk about the first term though that you mentioned. So to look into larger markets, and one of your theses there is to work as a pan-Asian market. Give us a sense of what kind of synergies can be leveraged through a pan-Asian market. What is really a pan-Asian market?
Oh, yeah. This is also, there are two directions I have. First one is the typically VC market only can do a long position, which means once I invest, then we cannot take the short position. So which means we need to holding the asset very long time. So that's the reason why Pan-Asia means so every Asia market has a different stage of the economy and startup league. First, as Japan and Korea has a very similar stage of the startup market. China is obviously different planet, and Southeast Asia kind of big market but very early. And India, also following the Chinese market, but still early. So we can follow the different strategy each other, which means we don't need to hold the one asset as a long period. So if we creating the Pan-Asian strategy, then we can choose a different stage of the asset each other. So Barry, I can say, risk-adjusted perspective, we can make a more higher return without kind of short position.
And so you see that definitely as a diversification in your portfolio, but you also see as an opportunity of growth of some of your portfolio companies inside to be more, as you were mentioning before in the strategy, be more hands-on, but supporting, the unnatural growth into maybe geographies that where you can push the.
Yeah, that's the second direction, and my internal homework. I really achieved that, and I assume that sooner or later, the market turns to be a more merged market in Asia. So from my experience, because this is my kind of unique experience from the Japan or Korea, because Korean market, okay, let's comparing to the Chinese market. Our domestic market is very obviously smaller than Chinese market, right? But qualified founder here and qualified business model here, and then advanced technology and etc. infrastructure here. So what if these startups can go to the not only Chinese market, let's say that the Asian market, because many US or European startups originally they start from the kind of total continental perspective they start. But my beginning time, many the founders or startup guys hesitate to look at the kind of global overseas market. There are many reasons at the time: information gap, language, cultures. Because Asia is not the one continental market. Let's say if we have the 5 countries, then each 6 different market here. So it's really hard to merge together. But anyway, now recently many founders doesn't care about that. Okay, let's standardize the service or let's localize the service. And if we have some backbone, then it's not the difficult things, because every information up there, and every information is very transfer, means easy to hire the right persons in local. If we have some capability or core competencies. So I want to become a kind of integrator type of the investors. So I'm starting to the Korean startups, and then I have the many information in Southeast Asia, and also I understand what demand in here and what kind of tech or founders thinking about. What if I can make some bridge between two things, and then contributing to set up the more overseas mindset when they're founding the company? This is a very different story. Okay, let's say turns to be a growth stage, or let's figure out how to go to the global. This is too slow. But inherently, they think and design to trying to become a more pan-Asian startup. From my experience, this is totally different approach. And from my experience, the start from the overseas designing has a better chance to go to another market, not quickly, but proper time.
And that's a change of a mindset that is key, right? That I think we're seeing a little bit more founders in Korea are starting to have. You still need to, I think, to create a generation of multiple serial entrepreneurs that know how to scale from A to B, and with the global view from the very beginning. But I think the first breed of this generation is out there, are the Kakaos and the success stories that you mentioned before. What is the role of government in all this development? I notice can go both ways, right? Can be supportive, but can also be a potential actor that make things more complex.
Oh, but before the government question, I want to put the one more things for the Pan-Asian strategy.
Okay.
So designing to the mindset for Pan-Asia is a kind of first step. But rather than that, more important thing is so kind of business arrangement between different true market is more important as an investor. So like I say, okay, let's say this startup in Korea, they grow very fast, and then I know what they have, and I know what they have core competencies or capability, technology, whatever. And then I know here the information of market, people, and also kind of collaborator or business organizers here. So if these two parts plug in together and very easily kind of articulating the kind of cross-border strategy. So I see some case that grow together between two countries and then become a more bigger startups. So that is a continuous and following the kind of phenomena to come up with my strategy from those kind of market trend. And then let's get back to the government. Arguably, many people say that the Korean government sometimes kind of make some limitation to the startups or regulation. But total my opinion or my perspective, the government did a lot of role and responsibility to Korean startup and VC market. First, government help out to bring the capital. I mean, the sovereign fund as LP. Of course, many pros and cons, but anchoring the LP portion is very important.
Absolutely, especially at the beginning. And so, for most of the few large VCs in Korea, they all have a sovereign fund as one of their LPs. Is that the norm?
So, yeah. MPS is a kind of, from my understanding, MPS, National Pension Fund, in Korea is second or third largest pension fund in the world. And they, of course, they have their own role, cannot spreading over the money.
Yeah.
But yeah, they have clear criteria toward the VC field is very supportive, and also the K growth. Compared to another Asian market, we have a strong sovereign fund for the VC field. This is very important factors, I think, especially the period of investment. Because still kind of corporate-backed capital doesn't come, and then somebody need to reading the market, and the government successfully doing that kind of role and responsibility in VC market though. And also another part is this is kind of personal opinion. This is linked with the first question that a Korean ecosystem. Like you say, Korean the financial market is radically getting bigger and bigger now. One part is bioscience. So bioscience is reading the IPO market in Korea. Also the reading the many VC and private growth capital in the market. Who knows, the Korean many bioscientists open the company, doing their own startups, and bring another biomedicine or the healthcare things. But truth is, during the 10 years, a lot of bioscience startups comes to the market. I think, of course, let's say that the founder side, capital side, very important, but government side, supportive. They do their role as a very supportive backers to create this kind of triangle of the economy, which means they are very supportive to IPO. They're very supportive to open the bioscience business. The bioscience is typically very intangible business,
but also very intensive in research, right? In R&D.
Yeah. So for the liquidation or financial standpoint, someone do some roles in the between to work in order to work this intangible market. I think the government
is playing their role.
Bring that role.
So, Eric, that leads me to the last question. That is, what do you think is next? What do you think is the next big wave, both in the ecosystem of startups in Korea, or maybe just in specific industry? You mentioned biotech as definitely a big wave, a big opportunity.
Always pros and cons. During the 10 years, we are running very fast, especially in the period of investment, which means now the time will come to judgment. So many investment means we need to do the many harvesting as a financial investors. Seriously, I'm thinking that is my homework. But hopefully industry itself is changing and getting bigger. Changing and getting bigger means many opportunity and another value creation comes from this market. So always a capital and money following that kind of value creation, right? So in that sense, I'm not so much worrying about the worst scenario, but from now on, we need to care about how we reduce the risk, how we do the liquidation control, how we gonna set up the exit strategy under our fund performance. So I think depend on this kind of outcome, some of winners can take all, and some of losers getting more losers, or some of new winners comes to the market. So within the 3 to 5 years, I think this kind of time will come.
Excellent. And we wish that you'll be, and we hope that you'll be obviously on the winner side. And so we'll have another interview maybe in a few years' time with all the harvesting that by then you'll brought to fruition. So Eric, thanks a lot for your time. I think your insights are very appreciated, and congratulations again for all you've been doing, and good luck for the future. Thanks. Talk soon.
Thank you very much. Thank you very much.
Bye.